Oh my goodness, guys, the stock market is not looking good, and we got to break it down in this video. So if you all find value, hit the like button, subscribe, drop me a comment. As always, I love hearing your guys' perspective. Let me know your thoughts down below in the comments, and make sure to join my Patreon if you guys want all my moves, call-outs, morning videos, Discord access, plus more. That's linked down below, and you guys could also get 5 stocks from Moo. Use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your money from Moo, link down below. And with that being said, let's talk. So the markets today did not do well, and the sell-off really accelerated in the second half of the day. Take a look, guys. SPY went down almost 2% on the day. The Russell went down, surprisingly, only 1% on the day. The NASDAQ went down over 3%, and we had the Dow down 1.4%, and the VIX was up 14%. But guys, look at this chart. The VIX was actually up a lot more than 14% earlier in the day. I think that was at about 2:30 p.m. on the East Coast. It was up about 25%. So talk about volatility, talk about fear. What the heck is going on right now? Well, it all has to do with Russia and Ukraine, and we'll talk a little bit about Goldman Sachs here in a couple of minutes, what they think in terms of the Fed this year. That's some interesting stuff from Goldman Sachs. We'll talk about that in a couple of minutes. But first, let's talk about what is rocking these markets. So take a look. Again, SPY just started to sell off aggressively at about 1 p.m. And don't get me wrong, it was selling off heading into 1 p.m. I mean, it started off the day at about 4:49, and then it was roughly at about 4:47 at 1 p.m., and that's where it really started to sell off. Stocks moved sharply lower, and I'm going to read some notes here that I have regarding Russia and Ukraine. Stocks moved lower in the afternoon after a jump in oil prices, and we will talk about oil in this video as well, and this is tied to the increased concerns about Russia taking military action against Ukraine, and you guys probably know all about this. You probably heard about it in the news or whatever across the media, different outlets. There's a lot going on over there on the border. And with about 2 hours left in the day, like I just showed you guys on this chart, the stock market's got very red, very ugly. U.S. National Security Advisor Jake Sullivan, this happened at about, I think, 2 p.m. on the East Coast, said at a White House briefing that there were signs of a Russian escalation at the Ukraine border, and that it was possible that an invasion could take place during the Olympics, which the Olympics are right now. And side note, I watched the snowboarding yesterday, the half pipe. That was a pretty awesome event. I'm not sure if you guys caught that. The Japanese dude, that guy crushed it, man. I forget his name, but he ended up winning. The dude's amazing. I think he was like 20 years old. He's just a kid. He's crushing it. Shout out to you. Shout out to you. You're not watching this video, but I watched your performance. That was insane. So, yeah, they killed it. Snowboarding yesterday, I watched that. And that's what they think is going to happen right now. Potentially an invasion during the Olympics. There's a lot of speculation about this, but that is what we're hearing. That's what Jake Sullivan said at a White House briefing today. And both the U.S. and U.K. have called for their citizens to leave Ukraine as soon as possible, right? To get out of the country makes sense, right? And Sullivan noted that the U.S. is not certain that Russian President Putin has made a final decision to invade Ukraine, but, quote, he said, quote unquote, it may well or rather, what did he say? It may well happen soon. That's what he ended up saying. So we don't know what's going to happen, guys. And what does the stock market hate? Uncertainty. The stock market freaking hates uncertainty, and this is uncertain. Is he going to invade? Is he going to say, Russia, go in, invade Ukraine, do your thing? How is this going to, how is this going to affect the world? Is it going to cause a ripple effect? Who the heck knows, right? So there's a lot of speculation. A lot of people are saying this is a bunch of BS, or maybe it's not. Maybe it's a nothing burger. Maybe it's legit. They're going to do this and cause that ripple effect. So there's a lot of uncertainty around this, and that's why the market sold off. point blank period. That is it. And we also got news from Goldman Sachs, like I mentioned earlier in this video. They are shifting their expectations for the Fed this year. Get this, guys, calling for 7 rate hikes in an effort to cool off an economy that has generated inflation far more persistent than policymakers had anticipated. So if they do 7 rate hikes like Goldman Sachs is expecting, let's say hypothetically, each of these rate hikes is 25 basis points. Do the math, guys. 25 plus 25 plus 25 plus 25. That's 1%. That's 4 hikes. They do 3 more. We might be at 1.75% Fed funds rate this year based on Goldman Sachs. That might be a little bit too hawkish. I don't know. To be honest, the economy probably needs that. With the inflation we're seeing, the only way the Fed can fight that is by increasing rates rapidly. But on the flip side of that, if they do raise rates rapidly, that's going to, try and tame, it's going to tame inflation, or at least it's going to try to tame inflation, but then it's going to hurt the stock market. So the Fed, like we've talked about a lot of times on this channel, they are stuck. They're just stuck. They're stuck in a terrible place. If they raise rates, they're going to crash the markets. If they don't raise rates, inflation is going to run rampant like it has been. So Goldman Sachs is saying 1.75%, maybe even more, depending on if they do maybe a 0.5% hike. Who the heck knows? So that is what Goldman Sachs thinks. And the Russia-Ukraine situation, again, it's extremely uncertain what's going to happen, and that's what's moving the market. So what do you guys think about all this? Drop me a comment. Let me know your thoughts. And do you think 7 rate hikes will happen? That's essentially, I think that's every meeting. I think we only have, 7 meetings this year, Fed meetings. That means every meeting there's going to be a rate hike, according to Goldman Sachs. Do you guys agree with that? Let me know down below in the comments. And now let's take a look more in depth on what's going on here on these markets, technically speaking. And honestly, not much has changed from what we've been saying, right? The 4-hour 180 SMA, big resistance on both SPY and triple Q. You guys can see it here on the 4-hour chart for yourselves. We got a huge rejection. Now we're under the moving averages. Triple Q broke under the lows from earlier this week and last week. That's not good. It's in a free fall state right now, falling knife. This might end up going down to 340. SPY, if I pull this up, double top rejection right by the 180 SMA, clear as day. And now we're under both moving averages. Potentially, if this breaks 440, which we did close above 440, but let's say next week we break 440, this might see a leg down, boom, to 425, 430. That is what the chart here is telling me. So drop me your thoughts, guys. Drop me your thoughts down below in the comments. And now let's talk about some stocks that are moving today, some that aren't, and we'll talk about some that got clobbered as well. Lockheed Martin, a defense stock. The defense stocks did pretty well today, guys, due to the whole Russia-Ukraine fears, the situation around that that we already talked about. This stock went up 3% on the day, and you can see it really accelerated at about 1:30 p.m. That's when the markets dumped. That's when we got that note from Jake Sullivan. That's where Lockheed Martin ripped from $389 to about $398. It rallied about $10, about 2.5% from that moment, 1:30 p.m. to about 2:30 p.m. And it seems like now it's right by a big resistance on the 4-hour chart. Notice 400, 398, 400. That has been a sticking point for months, ever since June. So if this breaks 400, which quite honestly, I'm confident it will, based on all this fear that's going on and uncertainty. I think it will break 400. If it does do that, and I'm not sure for sure it's going to do that, but I'm just kind of saying what I think. I mean, it is my YouTube channel, guys, after all, right? Lockheed Martin, if it breaks 400, which is also a resistance from over a year ago. I mean, it's been resistance for almost 2 years at this point. We break 400, there's a wide open gap to 415, 420, followed by $440 a share. I mean, that is where this thing could be going in the next couple of weeks, as long as these fears are here. As long as the VIX is elevated, this stock can end up ripping. So don't be surprised if Lockheed Martin outperforms the market. And of course, short-term predictions are very difficult, but don't be surprised if this outperforms the market over the next couple of weeks. I would not be surprised. So keep your eyes on Lockheed Martin. I looked at Raytheon, but this one wasn't moving up that much, but now it ended up closing up 0.2%. So still a green day in the midst of a red market. And let's see here on the 3-year chart. Raytheon, now Raytheon's at $95. $100 was the high before the pandemic, early 2020. This thing went from 100 to 44, then it recovered. Now it's at 95. If this fear persists, this could go to 100. It might break 100. So keep your eyes on Raytheon. Keep your eyes on Lockheed Martin. And I personally bought more Google today. All you guys in my Patreon know that. I bought some Google towards the end of the day. This stock went down 3.3% today, down about $90 a share. And now, officially, it is down, I think, over 10%. Yeah, it's down 12% from the recent all-time high after they reported stellar numbers about a week or two ago, and they announced that 20-to-1 split. Now the stock's down, and this is why patience is very, very critical, guys, when it comes to stocks like Google. I know a lot of people probably got excited when they saw the earnings, the split. Oh my goodness, the stock's not going to come down. Well, if you were a bit patient, it's come down about 12%. So if you bought at 3,000, I'm not saying you're a moron or you're an idiot. Oh, you're a dummy for not waiting. It's still a decent price, I would say, long-term at 3,000, but you should take it as a lesson to maybe be a little bit more patient, because a lot of the time when you see this hype news, a stock runs up 10, 20%, 10, 15%, which Google did run up a lot heading into earnings and after earnings. A lot of the time it cools off. And if you're patient, you wait for that cool off, you are going to be getting a better entry opportunity, or you're going to get a cheaper price to add more shares to your existing position, which is what I've been doing. I've owned Google for a while at this point, and I've been adding to it on this dip. And if it comes down, now it's trading at $26.90. If it comes down $2,500, $2,400, I'm going to be buying more on the way down ahead of this split, because I truly believe, and this is probably, this is kind of speculation, but I do believe if Google comes down, let's say 10, 15, 20%, which it's heading in that direction, heading into the split, which I don't even know when the split is. I probably should have looked more into that. But if this sells off into the split, I have a feeling it's going to potentially rip after the split. I don't know if that's for sure going to happen. I have no idea, but that's kind of what I'm thinking. So for me, I'm trying to accumulate as many shares as I possibly can right now ahead of this split, especially as it's suppressed. If the stock was still at all-time highs, I probably wouldn't be buying as heavy, but now that it's down 10, 15%, bring it on, guys, bring it on. I'm buying more. And let's take a look at oil. Oil ripped on the whole Russia-Ukraine fears, right? Oil went up 4.4% today alone, guys, up $4 a barrel, and it's clearly in breakout territory. It's been in breakout territory ever since we broke above $85 a barrel about a month ago. You guys can see 85 was resistance in October. November. Do you guys remember that? And then we ended up selling off from 85 down to 60 a barrel, which was a big drop, 25%. Oil got in a bear market. And I was telling you guys back then, I'm buying up oil stocks. I'm buying the dip on oil because I had a feeling this was going to happen, right? I had a feeling we were going to rip over 80, 90, and I think it's going to go 100 plus a barrel. That's the chart. That's what the chart's telling me. And with inflation, that's where we're headed. So I bought up the dip on oil, and I'm glad I did. I own XLE, as you guys know, which is an energy ETF. I've owned that for months as an investment, close to a year at this point. And I own an XLE swing trade, which I believe is right around $65. I own it right around $65, and I've not sold a dime of that swing. I'm holding on to it, guys. And today alone, XLE went up 3%. It hit a high point on this 4-hour chart. This looks as bullish as ever, and I don't think it's going to stop. I don't think it's going to stop until the charts prove me otherwise, which as of now, the charts are looking extremely, extremely bullish. So Yeah, I mean, look, crude oil, 100 a barrel. That could happen by the end of this month at this rate. Who the heck knows? Maybe in March, at some point in the next month, 2 months, 100 a barrel is it's right around the corner. So that's what I'm looking at, guys. Google, oil, the defense stocks. We had stocks like AMD down a lot today. AMD got hit 10%, big move downwards for this stock. It went down about $12.50. It's clearly getting rejected by both moving averages. We're now under both moving averages. And I'm pissed at myself still that I didn't short AMD a couple of months ago, and I was talking about it, guys. You know, I've mentioned this on the channel before. I'm not going to go too into it now, but short story, we were talking about it. I was talking about it when it was at 150, 155. The stock was way too hot. I was about to pull the trigger on a short, and if I did, I would be up a good chunk right now in that position, but shoulda, woulda, coulda. You guys know how that goes. We can't win them all. We have to focus on the next opportunity. And the last stock that I want to break down today, guys, is none other than Apple. Look at Apple. Apple is not looking good. It's looking a bit very bearish. Not even a bit bearish. Very bearish, right? We have this head and shoulders that did play out. Left shoulder, head, right shoulder. We dumped all the way down to 155. We tried seeing a nice, we did see a decent rally, right? From 155 to about 175. But what's very bearish here is the fact that we rallied, but we didn't take out the all-time high. We got rejected at 75 or 175, which is lower. It's a lower high from the all-time high, and we're also under the moving averages now. And on top of that, we're double topping. We already double topped. Look at this. Apple hit about 175. That was last week. It got rejected. Today it hit 175, or this week it did, and it got rejected again. And today it went down 2%. Again, we're under the moving averages. This could easily go back to the low 160s, maybe mid 150s, high 150s. Very, very possible. And you guys know how big of a company Apple is. At this point, what is it? A $2.3 trillion, $2.5 trillion, whatever the heck it is, market cap. This has a huge weighting on the overall stock market. If this comes down 10, 15 bucks a share from here, the markets are going to get rocked. It's just the reality of the matter. Actually, look, well, you can't see it. Market cap is $2.75 trillion. I didn't even know that. I mean, geez. I think it did hit $3 trillion now that I'm thinking about it a couple of weeks ago. So, yeah, Apple, Google, Amazon, all these stocks are coming down today. And Google's my favorite one of the bunch. And Facebook as well, although I don't own nearly as much Facebook as I own Google. Facebook's one that I've been accumulating the past, since their recent earnings report, right? Past couple of days, 1-2 weeks, I've been buying Facebook. So what do you guys think? Drop me a comment. Do you guys think this is a bunch of FUD? Do you guys think the Ukraine, Russia, is that situation something that we really have to be concerned all around, the globe? Do we have to be concerned about this for the stock market? Just let me know your thoughts. Drop me a comment, hit the like button, subscribe. Make sure to join my Patreon if you guys want all my buy, sells, call outs, morning update videos, more access to me throughout the day, plus Discord access. All of that's on Patreon, link down below. Or you guys can go to StockSurfest.com/Patreon. And don't forget to get your free money from Moomoo. Also link down below. Use that link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. Get your free money from Moomoo. Link down below. I'll catch you guys in the next video. Have a great weekend. Stay safe out there. Peace out.